Hi, and welcome to the Day Trading for Beginners podcast. This is season 2, episode 2. And in this episode, we're going to talk about my first day trading strategy. So my name is Tyler Stokes from StokesTrades.com. I'm on a journey to become a full-time day trader. And in the show notes below, you can download my 6-month blueprint that outlined everything that I have done in the first 6 months. You can go to StokesTrades.com/blueprint and you can download that document for free. So, after going through that 6-month blueprint, I'm basically at a stage where, I know the basics. I have a brokerage account. I have a paper trading account set up. I know how to buy and sell stocks. I know the basics of options, and I know, the basics about technical analysis. So now what do I do? What should I do next? Well, when I look at a chart, how am I going to decide how to make a trade? What is my strategy? So this is sort of, a question I think that every new trader will ask once they sort of, get their foundation of knowledge sort of in. And there are, potentially many, many correct answers to, what do you do to start your first trade, or, what strategy do you take? There's many, many different strategies out there. There are many ways to, trade successfully in the market. So, for me, the first strategy that I'm going to study is taught from the founder of the ReaDayTrading Reddit group. And I've mentioned that several times on this podcast. So his name is Harry, and he's created a Wiki, which is 100% free. So this guide shares his trading strategy. And below in the show notes, you can find a link either directly to where you can download the Wiki, or if you go to their actual Reddit group, you can search and you can find the PDF and you can download it and you print it and so on. So I'll include a link to the Wiki below in the show notes. So this is where, I'm going to start. And I'm starting here because, the information is free and it's provided by someone who certainly seems like a very legitimate day trader. So this Harry person, I've never spoken to him personally, but he does seem very transparent about all his trades. He posts them on X, and I just feel that he genuinely wants to help beginners. I think it's going to be hard for you to find someone that is super transparent about all their trades. Harry does seem to share all his trades and is open about them. I don't think you're going to find a lot of other influencers that do this. Certainly there will be others. I just don't know about them. So I came across Harry and I just kind of trusted him. And I do feel like he is a legitimate trader. He's clearly successful. And again, he seems to be genuinely wanting to help beginners, and he's not charging, for this information. So I think these are all just good signs. Plus, if you take the time to just look over this Wiki yourself, it's clear, he knows how to trade. I think even if you don't end up following this strategy, just going through the Wiki, you're going to learn so much about the market, about trading in general. And then, if you venture off to, pursue some other strategy, because, maybe you don't like this one for whatever reason, I still think you're going to get a lot of value from just going through the Wiki, and it's 100% free. Now, he does recommend, tools and a private community that you can join, which does have a fee. However, this is not mandatory. You can learn the strategy. You can trade successfully without the paid recommendations. At least that is what many people in that Reddit group claim. So, many successful members of their group do recommend, to trade for like a year before even considering any of the paid tools or subscriptions. So that is good to know going into pursuing this strategy. So again, these are, all good signs in my opinion, and some of the reasons I'm starting with this strategy. So it's clear to me that, this Harry gentleman is a successful trader, and it just doesn't feel like he's targeting beginners to try and sell them a course. Now, this doesn't mean that I or, you can't, look into other strategies. Obviously you can, and there might be some good paid strategies out there. I'm just going to start here. But I am starting here, but I am actually also planning on studying a strategy from a trader named the Great Matsby. His name is Matt. And I'm going to share more details about that in this episode and in the next episode. So again, you might find other strategies that you want to follow in the future. I've mentioned this a few times. Maybe, you want to only trade options, or you want to trade on a longer term basis. Or maybe you eventually, you want to become a scalper where you hold positions for like a few seconds or minutes, taking advantage of, tiny price movements. So you'll need to go out and find a course or a strategy or a mentor or some community that offers, information and helps you learn how to scalp, and so on. So the bottom line is we got to start somewhere. And I'm starting with the Wiki. So let's talk about this strategy first. And then I'll talk about the other strategy with Matt that I mentioned a few times. So basically for this season, I think in all the future episodes moving forward, I think I'm just going to share my progress going through the Wiki and, sharing what I'm learning. And that's how I kind of think this season is going to play out. So why don't we first start with a definition of what an edge is in the market, and then discuss the edge that this strategy from the Wiki claims to have. So you've probably heard, you need an edge in trading. Well, what is it? What actually is an edge? Well, an edge basically refers to a specific advantage or strategy that gives you as a trader a higher probability of making, profitable trades over time. So this could be like a unique trading method, a pattern recognition or market understanding, or a technical indicator that just consistently leads to, better than average results. So having an edge means that statistically, your approach is more likely to yield profits than just random chance or the average trader's strategy. So here's a summary of the Wiki strategy and how it kind of claims to give you an edge. And it certainly does. There are many, many successful traders that seem to trade with this strategy. So basically, some of the descriptions for this is my own summary of the first section of the Wiki. And some of it is going to be straight from the Wiki, or I might just paraphrase it a little bit. So basically, in trading, there are two ways to get an edge, either through analysis or skill. So big institutions have lots of money and resources to do deep analysis, which you and I as retail traders, we can't really match. So what we need to do is we need to focus on skill. So the secret or the edge that this strategy has is to follow what big institutions do. So these institutions, they spend a lot of money to move the market, and they have a big influence on stock prices. So you might be wondering, like, what actually is an institution here? Well, in this scenario, institutions basically, it refers to a large organization such as a bank, a hedge fund, mutual fund, or a pension fund or insurance company that invests and trades significant amounts of money in the financial market. So unlike, individual retail traders like you and I, these institutions often have access to more resources, more research, and, sophisticated trading systems that allow them to execute large trades that can influence market prices. So institutions are major players in the stock market, and they can include investment firms managing, billions and billions of dollars in assets. So instead of trying to guess what will happen in the market, smart traders look at what the big institutions are doing. So from this, strategy comes these two terms from the Wiki. One is, and it's called relative strength and relative weakness. So these show us where these big players are putting their money. And then this becomes our edge. So even though we might, always be a little bit behind these big investors, we can still make money by following their moves. So they might make, more money than us, but even getting a part of their profit can be good. And developing this skill to follow these big investors is key to becoming a successful trader using this strategy. So, okay, relative strength and relative weakness. What does this mean? And what does the Wiki tell us in terms of the definition for these two terms? Well, relative strength and relative weakness, basically it helps us see how well a stock is doing compared to the overall market like the SPY. So, the S&P 500 ETF. So by finding stocks that do better or worse than the market, we can spot strong or weak stocks, and this can give us an advantage. So you've probably heard of the SPY, but just to, make sure that we are all understanding what we are referring to when we kind of refer to the general strength of the market. So the SPY, it's the ticker symbol for the S&P 500 ETF Trust. So that's an exchange traded fund. So it's an ETF that tracks the performance of the S&P 500 index. And that index includes the 500 of the largest publicly traded companies in the United States. And it's often used as sort of like the benchmark for the overall US stock market. So that is what you were basically tracking. So comparing a stock to the SPY, basically it allows traders to assess the stock's performance relative to the broader market. So an example of relative strength, if a stock is showing relative strength when it moves higher while the S&P or while the SPY is moving lower, that is showing that it's relatively stronger than the SPY. So the significance here is that this indicates that institutions are likely buying the stock regardless of a market dip. Institutions or, smart money use market dips to acquire shares without driving up the price. So again, if the SPY is, flat or going down while a stock is rising, then the idea here is that big institutions are probably putting their money in that stock. And then the outcome here is that when the S&P 500 or the SPY, sorry, I'm interchanging those here. Again, the SPY is the ticker symbol for the S&P 500 index. When that now stabilizes or rises, these stocks with relative strength are likely to increase in value. So that's just one sort of, example of a relative strength. So there's basically kind of four types of stocks that will have relative strength or weakness against the SPY. So when the SPY is up, but the stock is stronger than the SPY proportionally, that is a sign of relative strength. When the SPY is up, but the stock is down, that could be a sign of weakness, relative weakness. When the SPY is down, but the stock is weaker proportionally, that is another sign. And then when the SPY is down, but the stock is up. So these are all signs that institutions may be buying that particular stock. And those could be signs that could be a good stock to jump on and ride, whatever the specific trend is. So, trading these stocks, it can give you an advantage. So just one specific example, if you're shorting a stock that is relatively weak against the SPY, and then the market starts dropping, that stock is going to drop, even harder. So so that would be a good stock to short. And if the market, suddenly decides to go up and you've shorted it, but it's weaker than the market, then that stock at worst is just going to, stay flat for most of the time. So that is the idea. And basically that first example, relative strength, if a stock's moving higher while the S&P is moving lower, big money might be going in there. And once the S&P, reverses and starts climbing again, that stock could potentially take off. So that's sort of the idea there of relative strength and relative weakness. So understanding these patterns, it helps traders identify stocks with institutional backing, and it can help you make informed trading decisions based on relative performance. So that, again, is the edge of this trading strategy, sort of in a nutshell. So just a quick recap. The edge of this strategy lies in closely tracking the actions of big institutions. These entities have the financial power to significantly, influence market movements. And by aligning with their trades, you can leverage their market impact to your advantage. So, after going through, the first section of the wiki, it seems that this is the gist of the strategy. It's outlined in the first section where they cover the method. And again, I'm going to put a link in the show notes to a website that also describes this sort of market first and relative strength and relative weakness in more details for you. So that's the strategy. that the Wiki outlines. Again, I've just started studying the Wiki, so I'm going to be going through each section and having a podcast discussing how I'm going through this journey. In the next few episodes, basically, I'm just going to discuss what I'm learning, and hopefully, if you're following along, you're finding this content useful, then that is great. And again, you can download a free copy from their Reddit group. Now, the Wiki also has a section that I've gone through, and it's called How to Tell the Story of a Stock. And that's a great topic to cover in the next episode because it relates to the other strategy that I'm also planning to study. So in the next episode, what we're going to review the great Matsby's strategy and edge. And then I'll discuss why I decided to learn more about it. So that's what we'll cover in the next episode. Thanks so much for listening. I hope that you found this useful. Be sure to subscribe to the podcast, and any useful link that I'd like to share with you for these resources, again, is going to be below in the show notes. So thanks so much for listening. I will talk to you in the next episode.